One of the keys to having success investing in the stock market is to pick the correct stocks and ETFs to hold on to long term. And when it comes to building a long-term successful investment portfolio, the choices can definitely be overwhelming. While individual stocks may have the allure of big gains, they also can come along with significant risks. On the other hand, exchange-traded funds or ETFs have emerged as a popular investment vehicle due to the diversification benefits, lower risk exposure, etc., etc. Now in this video, we are going to go over one of the best, highest quality dividend growth ETFs across the entire stock market, at least in my opinion. And I'm also going to explain how just $100,000 invested into this beast of an ETF could set you and your family's life up forever. Now stay tuned because we are going to go over all this and more. Right after you, please drop a like in this video and subscribe for more content like this. Now the longer that I've been investing in the stock market, I've been more and more drawn to dividend growth ETFs because of the diversification, their track record, and really just the simplicity of the investment. The truth of the matter is that it's really hard to build out a single stock picking portfolio that's going to beat some of the powerhouses like SCHD, VOO, or DGRO, for example. But that being said, let's look a little bit deeper into VOO and see what the ETF has to offer. The dividend growth ETF that we're talking about in this video is VOO, or Vanguard S&P 500 ETF. Now to go over some of the basics of this ETF, the product summary is that it invests in stocks in the S&P 500 index, representing 500 of the largest US companies. The goal is to closely track the index's return, which is considered a gauge of overall US stock returns. It's managed by Vanguard, one of the world's largest investment management companies and one of the most respected. Now the S&P 500 index is a widely followed benchmark index that includes 500 of the largest publicly traded companies in the US. These companies span various sectors and are selected based on their market capitalization, liquidity, and other criteria as well. The index is designed to represent the overall performance of the US stock market. The VOO ETF works by investing in a portfolio of stocks that mirrors the composition of the S&P 500. The fund aims to provide investors with exposure to a diversified range of large cap US companies, covering sectors such as technology, healthcare, finance, consumer goods, and others. As an ETF, VOO trades on the stock exchange and can be bought and sold throughout the trading day, just like any other ETF or stock. Now, VOO offers things like diversification, flexibility, and is relatively low cost compared to actively managed funds. VOO offers high potential for investment growth, and with this, the share value rises and falls more sharply than that of funds holding bonds. And lastly, more appropriate for long-term goals where your money growth is essential. And there really shouldn't be all that many questions on why VOO is so popular if we were to look a little bit closer on how VOO has performed on the max chart. Just around 10 or so years ago, VOO was trading at around $109, $110. And as of right now, about 10, 12 years later, VOO is at $415 per share. So investors buying into VOO should definitely expect some massive capital appreciation. Year to date, VOO is up 18.69%. Over the last 5 years, 58.77%. And remember, this is not including dividends at all. Now, VOO's holdings are pretty simple. It's basically that of the S&P 500. Top 10 holdings being Apple, Microsoft, Amazon, Nvidia, Alphabet, Tesla, Meta, Alphabet, Berkshire, and United Health Group. Simply put, all bulletproof companies that should probably be around a lot longer than any of us, and maybe even our kids' kids. Another thing that's great about VOO, especially for long-term investors, is the fact that the expense ratio is just 0.03%, making it pretty much the cheapest expense ratio of any other ETFs across the market. Next, looking a little bit deeper into the Vanguard S&P 500, ETF's dividend, and of course how the dividend has grown over the years. VOO has a trailing 12-month dividend yield of around 1.5%. So obviously not the highest starting dividend in the world, but with the capital appreciation, the dividend that VOO offers is sort of secondary. The dividend growth rate over the trailing 12 months is 9.87%. So at almost a 10% increase just over the last 12 months is honestly very impressive. The 3-year dividend growth rate is 5.12, the 5-year is 6.16, and the 10-year, a little bit more stretched out, is 7.42%. So more or less, VOO long-term investors should expect between maybe a 5 and 10% dividend increase yearly as time goes on. And to get a little bit more of a visual on this, it's pretty cool to see that as of recently, VOO declared a $1.58 quarterly dividend payout as of recent. It wasn't all that long ago that VOO was paying a quarterly dividend payment, less than $1 per quarter. And of course, going all the way back to the start of inception of this fund, VOO is paying only around 50 to 60 cents per quarter, making the most recent payout almost 3 times as much as what investors would have expected around 10 or 12 years ago. Another really bullish argument for the VOO ETF is of course the ETF's total return on multiple different time frames. If we were to match up VOO against SCHD and DGRO, all very popular dividend growth type ETFs, And if we were to go off the metric total return, which is dividends plus ETF price included, so it's not just how much the ETF is appreciated, it's also the dividends included. Over the last 5 years, all three of these ETFs have done very, very well. But VOO has returned 73.04%, making it number one. SEHD being right behind it, almost 70%, and DGRO last at 62.84%. Now again, I repeat, all these have done very, very well. And for me personally, I definitely hold all these in my portfolio because maybe I'm a fan of a little bit over diversification and I want to have a little bit of everything in my portfolio. But as you can see on the 5-year time frame at least, VOO has done the best. And if history was to repeat itself, it should probably continue to do so. So lastly, let's talk a little bit about what the title of the video was. I said earlier that a $100,000 investment into VOO could in theory completely change your financial situation long term, as well as your families and beyond. So if we come over here to this dividend calculator and type in $100,000 starting principal, with VOO's starting dividend yield of around 1.5%, an expected annual dividend increase at around 7, which is sort of in between what we've seen so far, an expected annual share price appreciation of around 8. And again, guys, all these numbers can change. This is just going off of a simple estimation, just to give us all an idea of what the future could look like. If we have drip turned down, which means that all the dividends over the years are going to be reinvested, a quarterly distribution, and no other money being added after the $100,000. Let's go ahead and see what we get. So year number one, this VOO investor would have $100,000 invested, of course, and around $1,500 a year in dividends. Nothing too crazy there, of course, not enough dividends to live off of or even close. But what's crazy is that by 5 years in, the principal would already be up to $234,000 because of VOO's dividends, the increases, and of course the capital appreciation. In theory, this investor would have around $3,400 a year in dividends. Again, nothing really all that crazy. But if we were to go 10 years in, this investor already almost has $484,000 worth of VOO and around $6,700 a year in dividends. And once again, because VOO's capital appreciation rate, the dividend growth rate, and of course the dividends paid being reinvested, the numbers just keep getting bigger as we keep going lower. Now again, remember, this is for an investor with a long time frame ahead of them. This investing path wouldn't necessarily make sense for an older investor, let's just say. But by 17 years in, this investor would have over $1 million of VOO and around $14,000 a year in dividends. By 20 years in, $1.46 million worth of VOO and $18,000 a year in dividends. 25 years in, $2.3 million and almost $30,000 a year in dividends. And all the way at the bottom, year number 30, this investor in theory would have $3.7 million worth of VOO and over $43,000 a year in dividends. This is exactly the math on what an investor could see in theory if they invested $100,000 in VOO and just let the investment grow and grow and grow over time. Now, of course, keep in mind these numbers could change and things always change in the market. Maybe VOO stops growing as fast. Maybe the dividend growth rate changes. Maybe it gets bigger. Maybe it gets smaller. But keep in mind, a younger investor with a decent amount of money invested in and really any of these high quality dividend growth ETFs could see significant gains if they just stuck with their strategy and stayed in the market long term. But I want to hear from you guys down below when it comes to dividend growth ETFs. What is your number one? If you could only choose one for the rest of your life, let us know the ticker down below and let us know why. If you enjoyed this video, make sure to please drop a like on the video and subscribe for more future content like this. Thanks for stopping by as always, and I'll see you in the next one.